Hi guys, good to see you again. This is Oleg, your real estate broker with Bellevue Comments. Today we have this live podcast and I'm so excited to bring my guest speaker, and we're going to talk about a lot of different stuff today about mortgage rates, real estate prices, and you guys don't be shy to ask questions at the end, and we'll try to answer all of your questions. And today is a big day, it's a Fed's day, and Fed's guys announced today 75 basis points hikes for Fed's rates, and that's probably gonna go reflect everybody. But first, let me invite my guest speaker today, and our guest is Ilya KOSENKOV, and Ilya is on the screen right now with us. Please introduce yourself.
Thank you, Oleg, first of all, for having me at the show. It's been a pleasure. My name is Ilya KOSENKOV. I work for Cornerstone Home Lending. I've been with this company in particular for a little over 3 years, but been in the industry over 17 years. And have gone through all ups and downs. So we're seeing a little bit of a market correction at the moment, but I think it's still a good and solid market, actually.
Good stuff. And today we're recording this November 2nd, beginning of November, but almost end of 2022. And today is a big Fed's day. Today we have this big announcement, and I just checked stock market is crashed. It's red right now. It's a lot of news all over the country about these hikes and how that's going to be reflect our life. But Fed's trying to fight inflation really hard, and they rise 75 basis points today on the Fed's rate. And my first questions will be for Ilya. What do you think, Ilya, like how that's going to be reflect mortgage interest rate?
That's a really good question, Oleg. To be quite honest, it's a question that's been asked multiple times throughout this year, 2022, as we've started seeing rates hike up. Just a little refresher, beginning of the year, we were closing loans in the low 3% rates, or maybe even higher 2s, and then we're all the way up to 7 plus in some instances. For the interest rates. Today's Fed meeting did not really have any impact on the mortgage interest rates. It did impact the short-term interest rates that are applicable typically to the second mortgages or lines of credits, if you will, car loans, consumer debt, and things like that. And as you can see on the chart, and compare it to yesterday's data, it looks like the market was actually, prior to the Fed meeting, actually reacted to be positive. Anything, if you see the graph going up, that means the rates have actually softened up or come down a little bit. But after the Fed meeting, the market had taken an adjustment. But again, at the end of the day, it cooled out to where we've started. Or where it ended on November the 1st. So basically, it had no impact whatsoever. How is it going to do tomorrow? I have a feeling, because we're ending the day in the red, I think it's going to impact the rates tomorrow, and they will probably go higher. That is my prediction for tomorrow.
Good stuff, good stuff. So I'm thinking Fed's rate hike is important, but it's more correlated to the inflation, to fight inflation, what Fed's trying to do right now. But mortgage interest rate more related to inflation rather than to Fed's interest rate. And inflation is going down. If they're going to be able to fight this inflation, what we have right now, I'm thinking like possibly we'll see next year. We'll see, but maybe mortgage interest rate will go down. But affordability, of course, like for everybody, for you guys who listen right now, so this is like very big issue in the United States. And I want to show you interesting slide. I have it for you guys, and this is like just for Seattle, Washington, for Seattle metro areas. You guys can see with me how rates change with medium close sale price and payment for the property. This data available from Northwest NMLS by end of September 2022. And as you guys can see with me on the screen, we in December 2020, 2021, we have about 2.68 mortgage interest rate for serious fixed mortgages, and medium sale price was about about $800,000. And price from December 2020 to December 2021, almost for 1 year, did not change much. So that just changed for a little bit from $799,000 to $839,000 in Seattle Metro. But you guys can see that mortgage interest rates start increasing and was pretty steady increasing just by a little bit. But again, starting in 2022, we have a huge spike in both prices and mortgage interest rate. And as you guys can see, by June and July 2022, we have like almost like 5.5%, like higher 5% mortgage interest rate, and the medium sell price for Seattle Metro was almost $1 million for the house. That was a huge jump just for 6 months, and I think we see right now like market adjusting, market shifting. And by end of September, medium sell price was $900,000. We're going to receive new data in a couple of days from Northwest NMLS for October, and we're probably going to see this number even lower. But what we see right now, the numbers is prices going down, but interest rate increasing. And interest rate was just a few days ago 7.12%. And this scares a lot of people, makes a lot of fear, and a lot of people on the fence buy house right now, or maybe not buying house right now and wait until prices met affordability, because if price is going to go down, you guys can see for this example on the screen. So prices, like affordability become better when prices start going down from $1 million to $900,000 in September 2022. Even with higher mortgage interest rates. So prices, medium payment for the property was $5,460, comparable to $5,690. It's just $300 better. But again, like we have to go much farther to make housing market more affordable for majority of people. But for you, Ilya, you're probably working with a lot of different clients right now. So, and as you're working with clients, they have fears too as well. And if clients calling you and just come to your office and say, we want to buy property right now, what do you recommend for us? Do you guys have high interest rate, like, or maybe you have some special programs available for the buyers? Tell for our viewers, like, what do you guys have available in Cornerstone Mortgage?
Sure. Before I start, I see a few comments that my mic was echoing, so I was trying to get that fixed actually while Oleg was talking. Is that better now? I would like to get some feedback.
Should be better. I can hear you very well.
Okay.
Just
hopefully,
continue.
Hopefully this is good. That's a good question. Affordability is probably the biggest question at this moment. Like I mentioned earlier at the beginning of this podcast, we've seen the rates go up from 3% to 7, a little over 7. For some of the other products, I mean, we're seeing rates over 8%. At Cornerstone, we just recently became a bank from a mortgage company. We acquired a small bank in mid-Texas. So we're officially a bank now, Cornerstone Bank. And because of that, we're able to offer our portfolio products where we use our own money. So we have gotten one. We have gotten one portfolio product, which is a 5-year ARM. People are saying that I'm still echoing on the mic. So let me just a second.
Maybe like I'll it's okay. Like I can make like a little bit quieter your mic on my side, okay. And that should be just okay. Okay, and use echo cancellation. But right now.
Okay, I'm going to continue. Yes, as long as you guys hear me. Sorry for the technical difficulties. Anyways, the 5-year ARM is an alternative product that has mid-5s interest rates at the moment. The way the product works is there's a minimum down payment of 20%. Minimum FICO score of 720 is a requirement. It is Washington State only purchase transactions, and there's some other restrictions to that, but it's one of the one of the programs that we recently came up with to help offset and kind of fight the higher rate environment.
Good stuff, good stuff. And I'm thinking, Ilya, like it's very important for many buyers. It's just personal situations because everybody have a different situation, different credit score, different DTI. Explain for us like what DTI means and how credit score can reflect mortgage payment and interest rate for the property, please.
Absolutely. The debt to income ratio is what you're referring is called the DTI. That's a loan officer lingo, but it is known as the debt to income ratio. So typically, debt to income ratio in should equal to 45% or below. That's just a general rule of thumb. So in other words, if a household makes $10,000, let's say gross income per month, then typically no more than $4,500, which is 45%, should be going towards the monthly payment. As far as the all the debts go, typically we allow up to 50% of the payment to go towards all the debt. So, for example, if someone wants to buy a house with the $4,500 payment, they're only allowed to have another $500 monthly payment towards for example, a car loan that will make a total of $5,000 household expenditure, which will equate to 50% debt to income. FICO score, on the other hand, it may or may not be as relevant because there are various programs that will allow you to still buy a house where, as a matter of fact, you don't even need the full 20% down payment with as little credit score as 580. Such as an FHA loan or maybe a VA loan. Those are two government loans that are useful when people are struggling with the credit.
Yeah, it's good stuff, Ilya. And I think like everything comes to affordability because if house is affordable for people, it means they pre-approve for the purchase. That means affordable when fits like DTI 70, 45 or 50% for the buyers. But majority of buyers, even if they pre-approve right now, even if the job allowed them to purchase property, they're still on the fence and thinking about better prices. They call me like, oh, like when we're gonna have like 30-20% price drop. And this is really depends on the seller's motivations. I think seller's motivation is important in Washington state because a lot of sellers not motivated sell properties honestly when the price is going down and market adjusting. A lot of sellers who purchase property for last 5 years, they purchase properties with 20 plus percent down payment. I read data from FHA, and what I see in Washington state, so only 8% properties for last 5 years was sold with 8% down payment or less for the property. Majority of the people put 20% down payment. And I just checked like last month, so how many we have cash sales recorded in Seattle Metro and Bellevue Metro. And what I saw there is in Bellevue Metro, we have like 37% purchases was purchased for cash buyers, and in Seattle Metro, 21% was purchased for cash buyers. So as you guys can see, those sellers who buy houses for cash and those sellers who put a 20% plus down payment, they doesn't really have motivation to sell property, even if they're thinking to maybe upgrade specifically with rising mortgage interest rate. So what I see right now in the market, who's selling homes on the market right now, people who actually have to move to different states for the job, or they move into different country, or retirees who baby boomers who decide to move to different states. That's only people probably going to be sell. And even with lower prices, because like if people bought properties like a while ago, I'll show you guys this very interesting slide. We'll show you guys some information. For example, if somebody buy a house a while ago in Washington state, it's data from FA from first quarter of 1991. You guys can see comparable to September second quarter, actually 2022. Prices in Washington state increased 481%. Well, what that means, even if prices are going to go down a little bit, like 20% or 15%, it's not just such a big deal. Those people who purchased properties before, they sit on a huge equity, and even if they sell house for lower prices, still have good equity in the properties. But for you, Ilya, like I have a question also. If you work in different states and I know like you have some properties in Florida and in Miami, and you work and you have license in Arizona, how you can compare different states' economy and real estate market comparable to Bellevue Metro and Seattle Metro housing market?
Great question. Very good question. From what I'm noticing is, Florida market is still going. They have adjusted prices in most of their cities, but Arizona surprisingly had a much deeper decreases decreases, if you will, in purchase prices, and which surprises me because um, Arizona, it borders with the state of California, and then there's a lot of people that want to leave the blue state and move into the red state across the borderline, and which drove the Arizona prices quite a bit higher over the last few years, maybe 4 or 5 years. And I don't know um, if it's picked at a certain level. I mean, at a certain point of time where we're seeing the declines, because the job growth in Arizona is probably one of the best in the nation. There's a lot of IT jobs that are still opening up. There's big companies that are out there, such as Intel and IBM and others. But from my perspective, what I'm seeing is I do see prices in Arizona softening up more than prices in Florida. And I think maybe another reason for Florida prices to stay about the same is it's a really great state to vacation, if you will. And I think now with the United States opening up its borders after COVID has ended, I was just in Florida not too long ago, and I saw a lot of tourists from Israel in particular. So I think that may be another reason why we're seeing Florida prices being a little bit more stable. I'm not saying it may not change overnight. And even with I actually visited Florida about a week after the hurricane hit, and people were not really panicking or anything. I think it's been pretty solid.
Yeah, that's very good stuff, Ilya. I sold probably for 3 clients last year properties who moved from Washington State to Florida for better schools for kids and for better climate and more affordable prices, of course. But I see Florida, it's pretty much South Beach of New York, and people make a lot of money in New York. And that's why a lot of migrations we see from New York to Florida. And I think
Right.
those prices probably going to be more stable than any other states, because that locations, majority of people live on the East Coast comparable to West Coast. Yeah,
Mm-hmm.
that's what I see Florida. But again, different states have different prices, and like people still have same dreams. A lot of people still thinking to buy properties, and a lot of people buy properties. So I sold like couple dozens of homes this year, and those people, like somebody moved, somebody purchased homes, and they have different reasons for buying properties. But own property in the United States is like it's American dream to own the property, and with those rising federal hikes in mortgage interest rate, it's going to be probably less affordable in the future for many of the people, and for especially like if sellers not going to be motivated to sell property, as they're not really motivated right now. I think we're living right now in very special market. I'm in this industry for 22 years. I never see this market before. I remember recession was how it was the recession in 2001, and I lived through recession from 2008 to 2012, and I never see this before, because we don't have still don't have a lot of inventory. We still technically in seller's market, because 15% homes selling above asking price, and the people reducing the price, and the majority of homes selling within 2 months on the market. And this is technically seller's market, but we slowly probably gonna move to the balanced market. But again, for many of people, for many of you guys, homes become less affordable. And specifically reasons for that is because a lot of investors who have money, they move to purchase homes again. And what I see on the market is a lot of investors, like for example, BlackRock, who owns Home Partners America, they have different cap for different city, and for Seattle areas they have capped $650,000. So basically they call every realtor in Washington states and telling them, we buy houses for cash, you present us anything on MLS will be approved, and just let's put those tenants. So they basically buying homes for cash and finding people who want to own to lease properties, and people have chance to get choose this program to lease the property from them and eventually maybe buy it in the future when situations would be better. But again, those investors moving from state to state and pick up a lot of homes, and this is make like more difficult for the majority of the people to buy like lower price homes on the market. What else I want to see this if, for example, Ilya, like I have questions for you. If I have buyers who want to buy a house today on today's market with this high interest rate, what will be your advice for the buyer to what they should do to submit perfect offer?
I usually start to answer that question with my personal example, and then, by the way, I do see a few questions being asked. We'll get to them, and at the end of this show, I usually put my own example. I bought my first house. I've been here since '98, so first home I owned in 2000. That was in the Kirkland-Bothell area. If everyone is familiar with the 405, it's right off of exit 22. That home was purchased for $220,000 back in August of 2000. Rate that I got was 8.75 or something closer to 9%. So similar market that we're seeing, we're in now. Then next year we refinanced the house. We held on to the house for about 4 years, sold it at a small profit. Then the recession came. So we sold it in 2004. Then the recession came in 08 to 2010. But had I had the house held, I still would be at a positive equity. So because I bought it for 220, the house picked to about 500,000 and then dropped back down. So that same home at the peak of the market, beginning of this year, probably could have sold for $1.2 million. And let's presume it adjusted to 900 to maybe 950. Basically, what I'm trying to say is there's never a good or bad time to buy. If you've made that decision to make a purchase, I mean, go for it. If it's really, it's the affordability. The other day, a client called, a referral, I should say, and he's like, I'm paying $2,100 in rent, and I want a house in Edmonds for $750,000. I really don't have any money to put down, so I went with the minimum down payment, calculated the payment at roughly a 7% rate. Payment came to be equal to $6,300. That's 3 times more than what he's paying in rent. So obviously, it's not affordable. It's just even if he was making thousands and thousands of dollars each month, I mean, it's just not an affordable payment. But on the other hand, actually, we're doing a transaction with Oleg right now. The people we're helping out is they have a $2,000, I believe, monthly payment for rent, which was due to be increased by $100, and their monthly payment they're getting into on this condo in Kirkland is going to be about $2,500. So that's within their budget, and so they jumped the gun and made an offer, and it got accepted.
Good stuff, good stuff. So like, yeah, I want to add to this because like we was working on this client last week and put it under contract. And when people was looking for buy property, they was not afraid for those high mortgage interest rate. For majority of the people, they affordability and mortgage payments most important than a price. If you will say for anyone like, okay, this payment is going to be this much, maybe less than your rent, but price will be millions, they're not going to be care about what price will be. They will care about payment, how much they can afford, how much payments they can make. And those clients, we sold at condo, 2-bedroom condo in Kirkland, by the way, we sold it for $340,000. It becomes really affordable with $2,500 a month payment, because what you can rent in Kirkland right now with the good schools, across from the park, 10 minutes from downtown Kirkland, with like everything's like you have a lot of amenities. You cannot rent anything for this price anymore. So, and sometimes it really makes sense to purchase, but just look not to the rates, don't look to the media or markets, look to affordability, what you can afford, how much you're paying for rent, and how much you able to afford to buy right now, and what kind of mortgage interest rates you will have. I think this is most important. And that client actually, it's a good story. I like to add to this. When we submit offer last week, we submit offer on Friday, and they did have open house on Saturday. And when we submit offer, like full price offer, we know like it was a good deal, one of the lowest price for 2-bedroom, newer unit in Kirkland. The unit was built in 1991. They just change roof. They change like a parking lot, put it new parking lot, and they did a full remodel inside. And the sellers paid special assessments. Was like no special assessments. Pretty much this client safe for next 25 years from any special assessments for this property. And $340,000 is just like crazy, amazing price for Kirkland you can get right now. And when we submit offer, I know it was a good deal. And they did open house, was few people come up, and the agent become quiet. So she did not answer anything, and she called me 6 p.m. Saturday, next day, and our offer was expired 9 p.m. on Saturday. And she called me like, Oleg, you know what's happened? We have buyers who wanted to submit cash offer. And they submit cash offer, and we compare your offer with 20% down payment client and cash offer, but with couple contingency for review, sell certificates and CCR and ART. But we waive those contingency, and we make like more easy for sellers. Pretty much like I know we possibly can compete with the cash offer, but we make this offer very attractive for the sellers to accept. And on the end, they accept our offer. They did not take cash offer, and my clients win at the end. So, and I'm really happy for those people, because if you guys dream, nobody can take your dream away from you. If you dream to have your own place, if you dream to, just have stability in your life, and if you have fixed rate for 30 years, for example, nobody will raise your like rent payment. Like usually rent payments increase a lot every year, but nobody will do that. So you have set payments. So only what can change just increase property taxes, and mortgage insurance can change, but payment for the bank will be the same for time of the loan. And this is like very good security with a lot of financial benefits, where you can write off up to $10,000 at taxes end of the year. You can write off mortgage interest payment. And also, if you imagine, if you buy property like as an investor, and is becoming like investment property, you can depreciate property for 27.5 years. Real estate is only assets available when you can actually depreciate assets, and those assets with the time appreciated. I mean, even if market will slowing down right now, corrected, we're gonna live through those next 5 years, and after 5 years, market will adjust again and gonna go with life with own pace. But again, real estate, it's only investments. If you invest in real estate, when you can depreciate assets, and assets will appreciate it. If you convert your stock market, stock maybe appreciates, not depreciate right now, they fell today crazy. But when they start appreciating, you cannot depreciate stocks. And if you buy, for example, a car, you can depreciate car value, and but those usually prices for cars going down, they not appreciate. So the real estate, it's only assets. It's very good assets. That's why a lot of investors have interest in real estate. And at the end, like I want to move to the questions and answer screens and see if you have any questions, and I'll try to answer them all. I see Evgeny here with us online. Thank you, Evgeny, for joined our live stream. Vladislav here, Tasha's here as well. Thank you so much, guys. Thank you so much for being with us. Don't be shy, ask questions, and let me see what we have here available. Okay.
I do see a question about Tennessee from Evgeny. And what do I know about that market? Last I heard that it's a really good Airbnb market. I think the area is called the Smoky Mountains. It borders North Carolina. Again, last I heard, it was really, really booming and really good as far as the Airbnbs go. Do I have a license in Tennessee? As of this second, I do not, but because we just acquired a bank, and we do have presence in Tennessee. From what I last that I heard, that as a bank employee now, I should be able to originate loans in all the states where we have branches and licenses, and Tennessee is one of the states for us. So I should be able to start originating loans there. I believe either the end of December or first part of January of 2023. So yes, eventually I will be able to get that done.
Great. Thank you so much. Thank you so much, Ilya. I see we have questions from Vladislav. Let me put these questions on the screen. And do you think if the next 1-2 years during the recessions, houses prices will drop for RPA will stay high for prices and will be about the same, or APR might change? Thanks.
I'm reading the question just a sec. Do you think that there was...
I will start answering like about next couple of years during recession. Not with every recession prices drop. Again, like if you guys, I'm not sure when you guys listen to this, like from what part of country, different states have different economy. So if you're in Washington State, it's one economy. If you're in Tennessee, it's different economy. And it just depends on your economy, depends on the housing market. For example, if you take like new constructions, we almost don't have any new constructions in Washington State. We don't have those massive $1,000 homes built like they're building right now, like in
Arizona, for
Texas,
example.
Arizona, for example, yeah. They have a lot of desert, a lot of lands that are available to do. In Washington State, we have like mountains on one side, or like Puget Sound on another side, and like very limited space. And specifically, we have very tight government and cost about 20% from the value of building the property. Just those, governing fees we have to pay before you can build pretty much anything. And again, I just mentioned on the screen for you guys, medium sell price $900,000, so 25%. It's almost like $200,000 government fee you have to pay before you can start to do anything. For those $200,000, you probably can buy a house in Montana or Dakota, but Washington State is different from different economies, I think. But again, what I'm thinking about prices, prices will adjust, definitely will adjust, because not many people will afford to buy property with those high mortgage interest rate. And I was watching today Fed's meeting and what they announced, and I read that. And what I see today, they're not going to stop. They're going to be hike another 50 basis points in December. They're planning to hike again and again and again. It probably can stop in August or September. It depends on the market, but they're going to create a recession. If you're going to go to recession, like formal recession, I think we're in recession right now, but we're going to go formal recession probably in 2023. Then Feds might just drop Fed's rate to fight inflation, and then mortgage rate is going to go down that time. But again, till that stuff happens, I think a lot of sellers will be on the fence to sell in Washington State, if you're talking about Washington State. And some people will move, some people have to sell. But again, if we hit recession, what possibly can happen, if people will lose employment and will go from the job, that's possibly can be a reason to get more inventory for a housing market, and then will be more possibility for the buyers to buy better deals and better homes. But till then, we have like formal recessions, I don't think anything can happen. And if we can have crystal ball, I don't have one, but let's say if we have one, I don't think anything will change until summer next year. Will be in the same market, but we'll see what's going to happen in May, end of the spring, and probably by June we'll see more clearly supply and demand, how much supply we have in the market and how much demand we have in the market for with those new rates will be available that time for the mortgages.
Yeah,
Ilya,
I absolutely. Yeah, I want to add a few things. You're absolutely spot on, like on everything you said. I read the other day the article that we currently have about at least in the Seattle greater market, we have about a 2-month supply of homes. For a normal market, what that means is if no more homes are being added to the MLS listings daily, then we'll sell through all these homes within the next 2 months. They say that the normal market is to have about 4 months supply. So we're not quite there. So just because of that, I think the government knows that data as well. They're going to continue working the rates up until they probably reach that level, and then just like Oleg said, I believe starting next year, maybe mid-year, because we also have a seasonal decline right now. So typically we're getting into the holiday season. That's a year over year. We're seeing end of October, November being slower. December, it's kind of weird, but December kind of picks. At least that's been for me. People, I guess, want to settle by the new year, and then January, February is also slow months. And then we're onto the spring market. So spring will show us where we're at. But I think you're absolutely right. If we're going to start seeing rates being lower, it may not be until next May or so. That's my opinion as well.
Yeah, good stuff, Ilya. Thank you so much. I don't see if we have any more questions coming today, and I will put Ilya information below under this video. If you guys have any questions for Ilya about mortgages, about different programs, please reach out to him. And also, if you need any advice or assistance in Washington State with real estate, I am always available for you guys and will be glad to help with all your real estate needs. With that, guys, we will finish this live stream. Till next time, and have an amazing week.
Thank you, Oleg.